Hi, I'm assuming we're live now for the Provenance Pulse, and hopefully this is working across all the different social mediums. This is going to be recorded as well. And how do we put the presentation up, Michelle? Great. So we can hop on to the third slide and just kick this off. So the first thing, I'm joined with June, who runs the foundation. I wanted to announce that I am going to or intend to officially join the board of the Provenance Foundation. So historically, I've not been part of the board. I've obviously supported Provenance through the work that we do at Figure, and we're going to continue to support Provenance through Figure. But I'm going to work more closely with June to take a more active role in particular with some of the listing strategies that we have for Hash, but also some of the broader rollout for the token itself. So we go into the next slide. Just a quick recap of how we've done. So June has gotten the validator community up to over 100. We're at 112 validators. We're up 50% on weekly transactions, which obviously manifests through to fees. I think if you see us on Artemis and some of the other platforms, aggregators that are now reporting us, I think Provenance is around the 9th or 10th largest fee blockchain at this stage. Obviously, our intent is to push that even higher up to 1, 2, or 3. There's 18 plus billion in TVL, of which over 13 billion are Figure loans. Figure's adding about $1 billion a month right now onto Provenance. So we're up 5 billion from Q1 2025. I think we should be running north of 3 plus incremental stuff we're doing. So call it 3 to 5 billion a quarter on a quarter-over-quarter basis. And then fees $106,000, which we have a set of objectives to push those higher. I think the tokenomics that June's done, where the fees that are running through or aggregating to the network aren't just gas and utility fees, but network fees as well, is going to give a lot of opportunity to lean in and extract some meaningful value and push us up in the league tables from, as I said, I think we're number 10 right now. I have to go look and see where we are today, into a certainly top 3, as we can continue to lean in to do that. And then on the next slide, not the last slide, but the next one. So Figure's continuing to build out on Provenance, and in particular, one of the things that we're emphasizing is the yields work that we're doing. I have the graphic from DeFi Llama that yields is at 99.5. And when I snap this, yields is over $100 million now. And we have several $100 million in the pipeline that are pushing through. We're going to start using yields in all the Figure marketplace transactions. So we trade any given day between $25 and $200 million of loans. You can see that in CoinGecko, where Figure HELOC, I think, is the 12th largest crypto asset in the rankings right now. The transaction volume there is generally between 25 and 200 million a day. We'll use yields for all of that settlement. We've also been moving yields onto other L1s. So a lot of you saw the SWE announcement, said, hey, what's going on? Are you abandoning Provenance? Of course, we're not. So the transfer agent for yields functions on Provenance. All movement of yields is still generating gas fees back to Provenance. But we like getting the ubiquity of the stablecoin. And you're going to see us do more native minting of yields across other L1s. I would expect, certainly by the end of next year, it will be across all the top blockchains in terms of native minting, but it's all accruing back into Provenance in terms of hash fees. And this is important because as we use yields for things like exchange collateral, right now, not everyone is built on Provenance. And so, there's lots of things that are done on Ethereum. There's lots of things that are done on Solana. There's lots of things that are done on SWE. And we're going to need to be able to natively support yields across those networks, as well as third-party activity that's wrapping yields across those networks. As I mentioned, Figure's adding $1 billion a month in new loans. You can see this on Provenance Pulse. You can also see this on the CoinGecko aggregation stats. It's now being fed into Artemis and RWAXYZ and other platforms. We'll talk about that in the aggregator side. But one of the things that we're trying to do as it relates to loans, and in particular as it ties back to Demo Prime, is we're trying to bring a warehouse facility onto Democratized Prime, where rather than our 200 partners using Goldman or Jefferies or some other sell side bank for financing their loans as they aggregate them into securitization, they're just going to use Demo Prime as a way to do that. So we're in a process to bring over $100 million of collateral onto Demo Prime and line that up against capital and continue to build into that. We think there's a huge opportunity to expand that out. But what I'm most excited about what Figure's doing is we're working on a bunch of relatively disruptive use cases, and I think one of the big ones is the idea of getting public equity on blockchain, and this is something that I've talked about publicly in a lot of the blog posts, and my intent to do this. You'll hear more about this over the coming weeks, but we are leaning in very aggressively and in a way that's very different than our peers, in that we're minting securities native on chain as opposed to taking a DTCC security and doing a tokenized representation of it. I believe we have a foundation to create, an alternative equity universe or equity ecosystem, one that is integrated into DeFi for cross collateralization and stock borrow, and this will all be built on Provenance, running on our ATS, which is on top of Provenance. So this manifests through into hash fees. You're also going to see work that we're doing around liquid staking protocols, in particular leveraging the yield from DeFi Prime and incorporating looping constructs in there. And we've been working with June on some inbound for non-Figure entities. And philosophically, the way that we've approached Provenance has always been, we weren't trying to get 200 people or 2,000 people to build a bunch of crappy apps on Provenance with this, ability to show 2,000 logos on a website and say, look at all the people building. We've been very focused around quality applications of blockchain that are sustainable, disruptive, and meaningful. And I think Figure is a clear example of that, and one in which we've leaned in to do that. But I think there's a couple other firms out there that are doing work around receivable financing, for example, that are of the same quality and size and scope of Figure, that can accrue the same benefits of blockchain. And because of what Figure's done in particular, kind of building the value proposition clearly from transactional efficiency to market liquidity to financing, which is the last step in what Demo Prime is doing, I think can provide a roadmap for those folks to lean in and build. And so, I'm excited about what we're doing, but I think for the first time, there's a roadmap to get some very meaningful participation outside of Figure. And of course, there's been other activity like Infinio and others that are important and valuable into the ecosystem. But what I'm talking about are entities that can drive the same kind of TVL and fee volume that Figure's driving, and double what we're doing, triple what we're doing, and continue to build into that. And so I expect that we certainly have a pipeline for that, and June and I can lean in and close that. June in particular, because she's been driving all this. That's going to be hugely valuable for us. So if we go on to the next slide, and one more. So what I've talked about in terms of listing, and I've been pretty vocal about this in the Telegram group, is I viewed the listing in sort of three steps that are somewhat linear and somewhat parallel. One of the first ones was just getting aggregators to represent what we're doing, and so we've gotten varying degrees of success with all these folks on here. I mean, I'm sure all of you or a lot of you know about my public Twitter spat with DeFi Llama, and you saw yields on DeFi Llama, and we're working very closely with them on Figure HELOCs and rolling that into Provenance as an L1. We believe Provenance is the second largest blockchain by TVL. TVL is a little bit of a misnomer. It's not as important of a statistic as fees are. Fees are really what matters, where right now, as I said, I think we're number 10. So we're very focused on, getting the representation on TVL that we deserve, and certainly getting the awareness within the crypto community on that front. but again, very focused on the fees side. So, in varying degrees, Artemis, I think we have a relatively full integration across Figure and Provenance. RWA, we do. I was obviously disappointed RWA is showing a permission blockchain on the league table rankings, but that's an internal fight that we have within the blockchain community. And then, as I said, varying degrees of success on CoinMarketCap, CoinGecko, and others. CoinGecko, for example, has yields, it has our loans, but we don't have provenance on that yet, and because they're waiting for DeFi Llama. And with DeFi Llama, there's some work we have to do because of the nuance of the loans, and in particular, the challenge that we have in terms of reporting there is they're taking the right philosophical approach, which is, you shouldn't just say I have $8 billion of loans on the blockchain, report it, because if you can't take that collateral and trade it or pledge it as collateral from a financing standpoint, then it really doesn't matter that it's on blockchain. It's a pointless transaction. And so what DeFi Llama does, which again, I think is absolutely sound, is they say, well, look, for an asset to be counted on chain, we need a transaction. We need to see the asset sold for stablecoin or sold for some value. And the challenge that we had initially is the bulk of the loans that we've done to date have been originated and asynchronously settled with cash wire. So what would happen is we would originate $1 billion of loans, we'd sell them to the market would send cash wire to bank, and we would effectively asynchronous settle across that mechanism. So there wasn't an on-chain recognition of a fiat transfer of the asset. And we are changing that. So we're actually setting it up going forward that, as I mentioned earlier, yields will be used to settle loan transactions within Figure Marketplace. And so that will aggregate through and report in appropriately to the aggregators. What we're working on is if there's a mechanism that we can backdate the wire transactions to effectively validate them. So prove that they occurred, prove that there was cash settlement, and be able to represent the historical TVL and DeFi Llama. So, best case, we're going to be able to do that. And, we'll have 15 billion, 18 billion, whatever that number is, on DeFi Llama for Provenance. Worst case is it'll take us 12 months or hopefully less than that to accrue another $12 billion of assets on there. And so each month we'll be going up by, call it $1 to $2 billion in TVL. But again, I think the TVL is important because of the league ranking, but what you really care about are fees. And that's what we're leaning in and trying to solve for. So we go on to the next slide. The other aspect that happens concurrent to this is community. And, a lot of you have said, hey, we're not investing enough in this. And historically, we haven't invested a lot in this. And that's, not, I think June would have preferred that we had a much larger bankroll for the community investment. We've been very judicious in hash sales in terms of maintaining hash, and have kind of made a little hamstrung for her initially in terms of what she could do with her team and with Miso and others. But there has been a community effort, and we are starting to grow that. We're starting to create, certainly a wider awareness. And again, I don't think we're going to have the builder community per se, in the sense that, I don't necessarily want people building dating apps on Provenance, because I don't understand why you'd use blockchain for that. In fact, I think you'd probably definitely not want your dating app on blockchain. But I do think that, the big applications like the ones I talked about earlier with receivable financing and others, we want to build in and lean on that, and we will get more of that. But I think it's more around us being able to manifest the story about, there's I think a great battle that's happening in financial services right now. And I think that it's between it's not even between TradFi and DeFi, it's between centralization and decentralization. And the crypto community is divided on this, right? That there are a lot of very large, well-funded stalwarts in the crypto community that are significant advocates of centralization, whose business models rest on centralization. I always felt that was paradoxical, but that's okay. And then there are those that are committed into DeFi, and we're in that latter camp. And we believe DeFi will win the battle. We believe that not just the way that we trade HELOCs, which certainly are decentralized today, and leveraging Provenance from vertical stack of origination all the way through to execution, not all the way decentralized because those securitizations are still happening on DTCC. So I got to fix that, and that's something I'll fix next year. But equities, commodities, whatever the underlying instrument is, the ability to displace trust with truth has three corresponding value props to it. It has transactional efficiency, it has liquidity, and it has financing. And that financing is a true DeFi construct. The liquidity is as well, right? It should be trading on decentralized exchanges, self-custody, bilateral, self-settle, self-clear. And so, we think we're going to be able to bring to market a narrative and a story around this. Provenance is really a bet on DeFi winning. And I feel very strongly about that. I think that you're going to see more of that infused into our community narrative. And so, there's going to be not as much cute stuff and pudgy penguins and other things and again, I'm not slighting anyone for doing any of this stuff. I think it's great. And I love that people engage, and I love anything that gets people exposure into blockchain. But this is really like the battle for the soul of the financial ecosystem. And, and I think what we are doing is spearheading that battle. Nobody is doing more work than Provenance and Figure on disrupting the existing centralized financial ecosystem. And this is going to become more and more apparent as we keep walking through this. So we go to the next slide. So the listing strategy that we have that, I'm going to be very transparent on is we had air cover we needed to do, which is get on the aggregators. We aggressively promoted Provenance in the Figure IPO. So if you read the Figure S1, there's an enormous amount of discussion about that. We have secured market makers. So Jump has given us a proposal to make market for hash. Now, they will make market for hash on Figure Markets after it is listed on another centralized exchange, because we are decentralized and they want the air cover for that. So there are others, I think Prometheus, I think Cumberland, who may be more aggressive in doing it on Figure Markets as we're working to get set up on other centralized exchanges. But as a lot of Jump is an investor in Figure. Jump is over 50% of the crypto volume on any given day. And Jump generally does not make market in token. And the fact that they're willing to lean in and do this, I think, represents their commitment to hash. They own hash. They're trying to buy more hash, as is Pantera, as are others. And that's to take out the overhang construct. Some of our investors are going to entities like Jefferies that got hash back in 2018 and saying, hey, can we buy all your hash because we want it? And getting rid of some of that overhang that there's some concern about with some of the listing agents like Coinbase and others. We have a proposal and a form into Coinbase. They're discussing it. Our project is a little bit unique in that, we issued all the tokens at Genesis. It's held across a wide variety of folks, including, 45% at the foundation, 20% at Figure, but 35% in the general community. And the biggest concern they have is the folks that got that hash back in 2018, like Jefferies, for example, are going to dump it when there's liquidity. I don't think they are going to do that. I think they're committed in, and everyone who's holding hash right now has the ability to sell. It isn't a massively liquid market, but it's liquid enough. And I think that those of us that hold it are really looking at this long-term opportunity of winning this battle between DeFi and TradFi, or centralized finance. So we have an application at Coinbase. We are working on an application for BitThumb. We would do both of those to get listed to then go to Binance. Binance has given us a proposal to go on Binance Alpha. I will not go on Binance Alpha unless I have spot and perp representation on Binance Market, the normal market. And so, most likely we will get on other exchanges before we engage Binance in a meaningful discussion to get past Alpha and onto the marketplace. There's a second approach to this, and this approach isn't any less valuable. And I don't mean to suggest the exchanges on approach A are more important or relevant than the ones on approach B. I think there's a reason why we bifurcated it this way, which is we go to Kraken, which I love. We go to OKX, we go to other centralized exchanges, and we go to the DeFi side. And Figure can use its hash position to stand up liquidity pools, AMM pools, and Uniswap and Radium and other platforms. And that's a way for us to drive ubiquity. Especially if it aligns with the amount of social engagement and community engagement, so that there's an interest in trading, right? We don't want to stand up large AMM pools and not have them transact. But we do want to lean in and effectively support access to the token concurrent with the air cover that we're building as it relates to that. We also have and are exploring a couple of third parties that Jump has recommended that can do a much wider distribution across exchange listings, more than we have the physical capability to manage, and so we're considering that as well. But there is an application in Coinbase. It's been there for a little while. It is actively being discussed there, and I get the feedback all the time. It's a big deal for them on a bunch of different dimensions because of the uniqueness of what we're doing. But we're optimistic and hoping that pushes through. But concurrently, there are other exchanges we will engage to get hash listed on. So our goal is to bring liquidity in, and still have it trade on Figure Markets with Jump making market there and others making market there as well. So, I had said earlier in the year my goal was to get this done by the end of the year. I realize we're in November 7th right now. That gives me roughly 55 days to get this inked and done. Hopefully that's enough time, and I'm moving as fast as I can on it. Okay, let me go to the next slide. So operationally, the foundation's holding effectively the same amount of hash it held the prior quarter. The financing of the foundation activity, so the engineering team, the marketing team, June, is coming from Figure. We've effectively we've given the foundation a loan and payroll support because we have a strong vested interest in the protocol. There was a lot of work that needed to be done on the protocol. I think that wasn't apparent to a lot of folks, and maybe we should have been more transparent about it. But when June took over, there was a decent amount of technical lift that had to happen, in particular for some of the use cases that we were trying to build into. And so, the prior team had done a very good job building the infrastructure out, but there was extensions that needed to be done for what we're trying to accomplish. And so, Figure is financing that because we want the foundation to hold on to its hash position. And I'd prefer the foundation not be monetizing hash until there's sufficient fee income or fee revenue or fee participation coming back through into hash to support the activity of the foundation. At which point they might not need to sell any hash anyway, and can think about using it strategically in terms of establishing a grant program, which we've tried historically and have not been successful on. Or other incentive structures as it relates to community building, including airdrops and other aspects along those lines. So, but the relevant position is the foundation's holding the same amount of hash that it held the last conversation that we collectively had. A couple more updates, and then we'll go to Q&A. So June, I don't know if you want to talk about Zone Scan in terms of using that versus the old Block Explorer.
Yeah, for us, I think that we wanted to focus on, what we're good at, which is really the protocol and the things that Figure and other institutions want to bring assets on for trading. So we've contracted with ZoneScan to sort of handle our Explorer. So we're going to have to deprecate our Explorer. We've taken a long transition period. There might be a few things we want ZoneScan to finish. But in general, you should go to ZoneScan.
Cool. And June, you want to welcome Victor?
Yeah, Victor, can we have him introduce himself? It'd be great if he could speak. But Michelle, Miso? No? Oh, I see him. Okay, there you go. Yeah. Victor?
Yeah, thanks for the quick space for introducing myself. I'm really glad to join the Provenance team. I will be leading all community activities, so you will be seeing me around. I've been in the crypto space for more than 5 years now. So I am really, really excited to join Provenance and, like to really grow this community and do exciting things with everyone. So thanks again to June and Mike for this space and the intro. And well, it's going to be great to be around with the community.
It's a big relief to have Victor.
Great. So, Michelle, what's the protocol, or Misa, what's the protocol for Q&A? Oh, so I see them coming across. I have to read these. I wish it was audio. From your perspective, figure out how does Provenance infrastructure complement or enhance lending platforms and bridging on-chain, off-chain assets for institutional borrowers? So I think that Provenance is important on a couple of dimensions. I mean, one is just the structure of Provenance. The reason we built Provenance back in 2018, the reason June built it, was really from the context of, at the time, proof of work was a predominant public network, and proof of work was very, very challenging for financial services applications. Not because of the cost or because of the the time to process blocks, but because of the lack of certainty. Right? When you lift an offer in a marketplace, you don't expect to hear, "Hey, your block wasn't written. Try again in 5 minutes." And it also introduced a problem where it was functioning so that was the proof of work issue. Proof of stake was coming out at that time, and proof of history, which Solana is. And these were much faster networks, addressed a lot of the challenges on the proof of work side, but they were functioning like golden data sets. And so if I put a loan on a proof of state or proof of history chain, the whole loan would go out there, the customer PII, the social security number, the addresses, all this stuff. And so that obviously was untenable. And what we ended up doing was building Provenance in a way that, one of Figure's loan files is 5 gigabytes of data. I put that on Provenance. It goes into an encrypted object store. It creates a hash that goes to the validators for the writing of that data. And then there's a tie-in that effectively keeps those things in sync, such that if I go to transact that loan 6 months from now, you're going to be able to validate the data I'm giving you as true in a way where the validators aren't holding the PII data. That's critical for financial services. Now that can be replicated. You could build that on Solana or Sui right now. And by the way, I think there's going to be lots of L1s out there. I don't think there's going to be a single one, although I want Provenance to be the most valuable. But what Provenance also has is an ecosystem. So there's a broker dealer on Provenance. There's an alternative trading system. With yields, we have permanent fiat rails on and off Provenance. And obviously Figure's commitment into it. We have DART, which is a huge issue, or a huge advantage. So I have Goldman as a warehouse provider, and the way warehouse lending works is I send them a spreadsheet full of loans and they send me a bunch of money. And then they spend 5 days figuring out if I lied to them about the spreadsheet or not. This is how you had Tricolor and how you had, Fast Brands. What was the other receivable one that just went bankrupt? Where people would double pledge these things and what have you. You can't do that on blockchain. If the loans are on blockchain, you can get a UCC Section 8 security perfection to them. And I went to Goldman a couple of years ago and I'm like, look, why am I pledging you loans this old, stupid way where I can rob you? Why don't we do it on blockchain? And, they're like, oh, public blockchain makes us very nervous. You can steal our loans, blah, blah, blah. And a bunch of, ridiculous stuff. What the TradFi community loves to do when they don't want to deal with public blockchain is they bring up the key issue. They're like, well, why do we lose our keys and we lose the loans? And, obviously MPC solves this. There's other aspects that solve this. It's an antiquated boogeyman for the industry that we should put to rest. But, I finally got them to start using it, and they figured out, hey, wow, not only do we not have to spend the money for someone to spend 5 days figuring out if you lied to us, you can't lie to us, and we get the money out earlier, meaning we get paid faster. And so all of a sudden they're in a situation where they're generating more revenue. They're reducing their costs because they're using public blockchain. And that DART infrastructure is germane to Provenance and a huge competitive advantage and differentiation that we have. And so that ecosystem is what I think is going to drive very large traditional players in a true public way. And if you contrast this to what Canton's doing, for example, and I have a lot of respect for the Canton team and I appreciate what they're doing. but they're doing a permissioned approach because their constituents aren't comfortable in the public construct. To me, without public blockchain, there's no point in having the blockchain. And again, that you could say I'm a zealot about that or a maximalist to it, but that's just my philosophical view and where I'm aligned. And I think I'm dragging a lot of big TradFi kicking and screaming, Goldman and Jefferies and Morgan Stanley now into blockchain because ultimately it makes economic sense for them. They make more money and they save costs and they reduce risk. And that's why we're going to be able to continue to drive that momentum, especially in a regulatory environment where it's no longer taboo to be on blockchain. So I will read the follow-on question. Just follow-up question, Mike. I like the audio better because then if you disagree with me, we can argue and it's more interesting as opposed to typing, but it's okay. We can maybe do a Twitter Spaces at some point where people can talk and argue. But a follow-up question, what do you see as the biggest regulatory tailwind or hurdles for Provenance ecosystem 26, especially with evolving U.S. policies around tokenized assets? So look, there's obviously we had the Genius Act pass, and we were very much a proponent of the Genius Act passing. In part, the Genius Act doesn't allow coins to pay yield, whereas Yields pays yield. So Yields is a stable coin that is not part of the Genius Act. It's a security. It's a public fixed income security registered with the SEC. And that yield differentiation, we think, is opening up a lot of opportunity for yields, in particular for banks that need a defensive mechanism. As JP comes with JP coin and all the awesome rewards on it and all the cool bells and whistles. If I'm a regional or super regional bank, I have no hope in competing with that unless I have something that can pay interest. And that's where we think there's a huge opportunity for yields there. And the Genius Act opened that up. There's a lot of focus on clarity, the Clarity Act, or now they're calling it the Market Regulation Act. And the issue we have with the Market Regulation Act is with Genius, everyone kind of got behind it. The banks realized they got bamboozled a little bit because Coinbase can pay interest on USDC, and they didn't understand that construct when they came into it, and they're trying to close that. And they're not going to be able to, in my mind or my opinion. Clarity, there's a lot of division, and in particular, the crypto community isn't aligned on clarity because the centralized and decentralized folks are at diametric ends in terms of what clarity is. My view is DeFi should not be regulated in a securities construct. It's a bilateral peer-to-peer transaction, and as such, it doesn't live within the domain of traditional regulation and that ecosystem. That is the view the DeFi community has. That is not the view the TradFi or the centralized community has. And then in addition, with clarity, you've got TradFi players trying to bring the TradFi ecosystem into crypto. So you have ICE and NASDAQ who basically want to recreate DTCC, but for blockchain securities. And at that point, I don't know why we do that, what the value prop is that we've done in terms of blockchain. But again, this is an argument that we can have that the community isn't universally aligned on. But the key for us is there is nothing in the Clarity Act necessary for the things that we have to execute on for the next 24 months. So we have some very bold and ambitious plans at both Figure and Provenance. And there is no requirement that Clarity is passed for us to do any of those plans. Clarity getting passed can help, and it can make us go even faster in terms of some of the things we're doing. Maybe things that we were going to do 3 or 4 years out, we could pull forward to the next 1 to 2 years. But certainly the next 24 months are not predicated on Clarity getting passed. So I would say we are in a very good position. To me, the most important thing that's happened from a regulatory standpoint is the SEC has withdrawn the use of enforcement as a policy tool. And that means that we can be comfortable operating within the letter of the law without the issue of someone interpreting it differently and sending enforcement after us. And that, I believe, gives us an enormous amount of viability in terms of what we want to execute to. Okay, next question. Do these changes mean Provenance switching from institutions toward more everyday users, or is it still? So I think what it means is twofold, which is I believe we are still going to be focused in terms of fee-paying users on large institutions like Figure, but we are going to take the messaging about what we were doing, which is the true decentralization of finance, to the people. And one of the things I love about Demo Prime is there are almost no institutions on Demo Prime, right? That's just retail. That's you. When I did the Figure IPO, I did what I think was the largest allocation to retail that any Goldman Sachs IPO has ever done, because I wanted retail to hold the stock. And in this situation, I want retail to understand this battle that's happening between TradFi and DeFi, or more importantly, between centralization and decentralization. I think that's really how we should characterize the battle. I think TradFi and DeFi was 5 years ago. I think this is more, centralization versus decentralization in a battle of the soul of blockchain. And I want people to have the ability to participate, both in terms of the governance, in terms of the decentralization of the network, and in terms of fee participation, in the development of that DeFi ecosystem. And so, I see the messaging for participation of holding hash and voting it and staking it and generating fees from it as a broad retail application versus, a large institutional application. And that's where we're focused on being able to get that wider distribution and part of the community messaging we're doing. Okay, next one. When do we burn 99% of the hash supply? So and some of this, Figure has an earnings call on the 14th, and so I have to be very careful about what I talk about in terms of certain Figure activities. My intent is to have a structure where hash is being burned versus redistributed, at least a portion of it, through participation. So I fully anticipate that hash will be deflationary moving into 26. I'm not going to say 99% is going to be there in 26, but certainly it will begin to be burned as part of the process in 26 by the entities using it. How are you addressing interoperability challenges with major L1s like Ethereum or Solana? So I'll split this into two pieces. June can take one part. I'll take one part. So as I said, with things like Yields has a transfer agent, which is book and record. So, Yields is not a true bearer asset. And by the way, nor is USDC a true bearer asset. There's a transfer agent that effectively controls the wallet address, ownership, and registry. And as such, now that we're minting, or soon to be minting, Yields on SWI, you can move Yields from SWI to Provenance through that transfer agent. Right? There is no mechanism in which you need a wormhole or an IBC or what have you. There are still things that we'll need bridges for, and because not everything's going to have that transfer agent, but certain aspects of what we do, especially on the security side, can move across L1s through that TA. But June, maybe you can talk about where we are on some of the bridges and what we're trying to do on that front.
Yeah, I mean, we'll be using Chainlink as a bridge. We've spoken to all the bridging companies. I think they have not the best model. I think they're struggling to determine how their revenue is going to increase, but we have a pretty tight partnership with Chainlink, and so we're going to be using Chainlink to bridge. So whether we mint natively or use a bridge, the transfer agent, as Mike described, will be keeping track of the asset as needed, depending on which asset it is.
Great. What else we got? How are you guys thinking about the percent of hash staked hovering around 16%? I don't know, June, if you have a view on this. I can opine, but I'll let you go first if you want to talk.
Well, I mean, I think that I mean, I think that what we've really focused on are the assets, as Mike described in the beginning. And so now we're sort of turning our focus to the hash community and the hash token itself and how it performs. So be seeing more about this, but this is something that we need to focus on now as we haven't in the past.
Yeah, and to be clear, there isn't any inflation happening from this. There's a fixed supply of hash. It's just, we would prefer a broader participation in the decentralization of the network on the staking front. So there's some efforts that we're going to do to encourage that. For aspiring builders, what tools or grants from Providence Foundation would you recommend to kickstart institutional grade DApp? I think you need to convince June that what you're doing is big, impactful, and can move the needle. And you can do that. She has all the discretion in the world to lean in and put resources, including hash and other things behind you, and including figure resources behind you. But I can tell you, if you go to her with the Provenance dating app, she will not back you. But if you go with something substantive and that has a massive market, and you have a team that can execute and lean into it, there are resources there. Okay. Also, you mentioned onboarding receivable financing providers in Provenance. I've been digging into that space and broader trade finance gap. Looks like a real greenfield opportunity. Talk to June. She's driving that. This is one of her favorite projects. And you are right. It is a massive greenfield opportunity.
Yeah, so I am talking to a couple firms. One is directly about receivables and payables, and one is trade finance. It's a transportation management firm, and it is it's absolutely interesting because it's an asset that is way simpler than a mortgage, and something that has an enormous amount of fraud, and a lot of mistakes. So I heard that one large institution was overpaying their invoices, and they discovered it, and it was a pretty massive error. And this plus some other tightening of technology can really help that community quite a bit. So I am working with two firms at the moment.
Sure. June, maybe we can split this one too. What are some of the biggest technical operational challenges Provenance faces when it comes to mainstream use? Yeah, I think one is, there were a lot of, I think one is there were a lot of aspects of Cosmos that would have allowed for better interoperability, of which we've modified and introduced some issues with that. And so, things like wallet connect to the ATS to trade securities, should be easier than it actually is going to be because of some of the particular things that we built out. And those things were built with the best intentions. It's just, we probably didn't do a great job describing the potential use cases and applications of some of the things. So there's work that we have to do because of customization off of the Cosmos SDK. And there's some things that we've done that are great off of off those customizations. I'd say the bigger issue is, most of the applications have been purpose built by Figure for Figure's market, as opposed to general utilities, right? So we don't have a DEX on Provenance. We should, and I know some people are thinking about building that, and that's something that I would get behind and support. But the bigger limitation is and June can go into what some of the challenges are to build on Provenance and how she's trying to deal with it. But from my perspective, those are some of the issues. I don't know, June, if you want to build on that.
Yeah, I think that there hasn't been really historically a lot of attention to builder tools. And that is because, Figure has been sort of the center of and the largest and most used. They're the largest user of Provenance, and the focus was on making the tools work for the asset that we were focused on, and the tools in the capital markets area that we were focused on, the trading. And so, I mean, a lot of people, or maybe I say that if you look at the market, we did things a little bit backwards. If you're just focused on the blockchain aspect, we built the business, and now we're turning our focus to the foundation and the token, whereas others do a TG and they're trying to work out what that business is going to be. Or they don't, and they just, do what everybody else does. But we focused on the business first. And so we're behind on developer tools. It hasn't been a focus at all whatsoever. And so we are thinking through that right now, especially with the new asset originators and traders who want to use Provenance.
Will hash always remain inflation? So I don't think hash is inflationary in the sense that there isn't any more hash being created. And as I said earlier, my expectation is you will see specific committed deflationary processes put in place in 26. June, I don't know if you want to talk about cold storage.
I'm not sure what this means either, except that I
Well,
mean, I do believe we
what-
have a cold storage option.
so will in any cold storage wallet that supports Atom, for example, can it support hash, or is that not the case?
Well, I mean, this goes back to the wallet support for all the different wallets, and that is what we're working on.
All right. So it sounds like we're working on more. With Artemis, adding dashboards for your provinces help provide more accurate numbers to data aggregators. They don't look at each other, but it certainly provides some pressure and incentive for them to get the numbers right and to get them fed in. I think there's
So let me take this one. All the aggregators look at different things, right? So we were just having this conversation this morning. Like DeFi Llama wants to run the same code that we run. RWAXYZ, they want to calculate some servicing number, which is really silly because servicing is just a beast, and anybody who calculates is going to come up with a different number. And somebody else just wants to use the JSON file. So they all want to ingest the data differently. Nobody really wants to go to the blockchain for it. So I don't know how you make the numbers foot unless they all use the same source, whatever source that might be. So so I think, and I stopped looking just because I was a little bit aggravated myself. Artemis apparently was going to post like $90 billion, which looks great, but it was wrong. So so there's things like that happen because they are using different sources.
Michelle, the font keeps getting smaller and smaller, and I'm older, and I have to get closer and closer to read it. As fees scale, when can we expect a greater share of distributed validators and hash stakers to help reinforce hashes on chain value? I mean, I think this is just it happens linearly as fees grow, right? So right now, if 15% of the token is being staked and there's $100 of fees, it's going to those 15%. If there's $200 of fees, that's going to those 15%. Figure and the foundation have reserved or held back staking specifically to ensure that the community is getting the economics of this. Because if we both staked our entire positions, then that's obviously diluted to the fees that are coming through. So the number one thing we can do is raise fees, and as I keep alluding to, I think we are the 10th largest blockchain right now by fees, and I want to get us up in the top 3, and that's going to mean more figure activity, but also more third-party activity that can move the needle for us. Okay, larger font again. From what I've learned, ID is one of the most important technical area that blockchains need to solve in order to meet regulatory requirements and for mass adoptions. How Provenance has tried to work in this area. What are those? And I think that's going to say, what are the solutions? I think I got cut out. So I think ID is a huge thing. And one of the things that we tried early on, and I think we were ahead of our time on this, was this concept of a passport that would attach into your wallet, right? So you'd go through, you get KYC, you have the passport, and there'd be reciprocity of that passport. Like if a Kraken user came to me with a passport, I'd be like, okay, you're good. And if in the event of a KYC required transaction, and vice versa, we went the other direction. And I think in the beginning there was a lot of pushback to that. What you're seeing in the wallet space with like Phantom, for example, is they are trying to build a KYC passport structure. And I think there's an opportunity for us to build reciprocity. And so, that means that there is a potential role for someone to establish we are the key identity passport that everyone's accepted, right? You have a regulated entity that does it, so you can do reliance and so forth. And so, I think there's interesting opportunity on that front. And, it's one that we'll probably re-lean in on ourselves. But we'll also look for opportunities to partner with folks who want to build in that vertical.
All right. There are still a couple of other questions, but I think
let's just try to knock them off really quick. I know we got a board meeting at 9, but we got a few more minutes if that's okay.
All right, that sounds good. There was someone who asked, is the planned 100-to-1 tokenomics conversion still scheduled to take place?
So it's been approved in terms of where it is in the queue. It's been pushed back in June. I don't know where we are. I would like to push a revote because I don't want to actually do it. But I might get overruled.
So yeah, I mean, we pushed it back and hold because we have a lot of other things we need to be focused on, and that didn't seem to be the right focus. And so we are rethinking it and possibly putting to a revote just because of resource constraints.
Great. And then June, one mention from one of our validators, they're suggesting look into Stata as an alternative to Chainlink, and it might be useful with a couple of the other community members chiming in. And then one more comment that might actually be interesting is a request to consider listing on KuCoin and Bybit as well. So not necessarily questions, but those are people asking or suggesting certain areas that they would love to put.
We appreciate the input, and KuCoin is effectively the onshore version of OKX's platform, and so if we do the OKX listing, it would include KuCoin, and Bybit certainly in the queue or on the list for us.
I think somebody told us if we're on Coinbase, Bybit will list as well, so we could try both.
I think that wraps up the majority of questions now. We'll definitely work on the next stream being a little bit more of an interactive back and forth format. But thank you to everyone for joining, and appreciate everyone listening in. And we'll see you guys next time.
All right. Thanks, everyone.
Everyone. Bye.